Blackstone just announced a plan to invest $500 billion overseas, mostly in Europe.
Here in Europe, we think we're going to be able to invest $500 billion over the next decade.
Warren Buffett just pumped $23 billion into Japanese trading companies.
Warren Buffett actually making some news over the weekend, announcing that Berkshire Hathaway has actually acquired a stake of slightly more than 5% in each of the 5 leading Japanese trading companies.
And BlackRock, they're going global too. So here's the question: why is America's biggest money moving out of America? Warren Buffett is known for playing the long game, and he said he may hold his Japanese investments for 50 years or more.
Berkshire CEO Warren Buffett and Vice Chair Greg Abel once again endorsing Japanese trading houses at the company's annual shareholders meeting in Omaha, saying they could hold them, quote, forever.
I'll speak for Greg beyond me that in the next 50 years, and I hope he's running things then, we won't give a thought to them.
These aren't short-term trades or generational bets. Blackstone, they're not just buying real estate. They're betting big on infrastructure, energy, housing, and supply chains, everywhere from Europe to Asia. This isn't fear, it's strategy. They're not exiting the US entirely, but they're clearly hedging against something. So what do they see coming? And what should we, as investors, be paying attention to? Let's be real. Big investors, they don't move billions of dollars for no reason. So what's making them think twice about putting more money in America? Well, let's start with the credit downgrade.
Moody's has lowered the United States credit rating because of an increase of government debt.
The problem is the amount of debt the United States holds and the deficits that the U.S. government consistently runs. And Moody's saying over the past decade, this situation has gotten worse.
In May of 2025, Moody's downgraded the U.S. credit rating.
Moody's is lowering its credit rating on the United States debt one notch to AA from AAA.
Citing political instability.
Protesters and authorities have clashed, where authorities have fired rubber bullets to disperse sections of the crowd.
Cars burning all over the place, people rioting. And by the way, we stopped it. We were able to make it much better, but it still looked pretty bad.
And rising interest costs.
Many estimates of the longer-run level of the policy rate have risen, including those in the Summary of Economic Projections. Higher real rates may also reflect the possibility that inflation could be more volatile going forward than during the inter-crisis period of the 2010s.
And out-of-control debt.
Due to increasing government debt and interest payments, but improving the outlook to stable from negative.
That's not just a headline. It sends a message. America's financial engine is overheating, and no one is hitting the brakes. Right now, the U.S. is spending $1 trillion a year just on interest payments.
We're spending $1 trillion a year right now on interest. We're taking in 5, we're spending $7 trillion, and that's why we need to take this bill from the House and bring it over to a more conservative Senate.
That's more than what we spend on defense, education, and veterans. The national debt, over $34 trillion and growing by $1 trillion every 100 days.
The national debt stands currently at about $36.2 trillion, and every day, the U.S. spends about $2.6 billion paying the interest on that debt.
And all of that combined makes inflation harder to tame, which means interest rates have to stay higher for longer, which puts pressure on housing, small business, and everyday Americans. So ask yourself this: if you are managing billions of dollars, would you keep all of your money in a country that's printing its debt, losing credit trust, and can't even agree on a budget? Or would you diversify quietly? That's exactly what the smart money is doing. So where is all this money going? Let's break it down because it's not random. Warren Buffett has gone deep into Japan. He's invested billions into trading companies like Mitsubishi and Mitsu. These are old school companies that control everything from energy, commodities to shipping. Why Japan? Stable dividends, cheap money. Japan's interest rates are still close to zero. So Buffett is borrowing in yen, investing for the long term and getting paid to wait. Meanwhile, Blackstone is going big in Europe, snapping up infrastructure, housing, and logistics. They're not chasing hype. They are snapping up real assets in locations where the governments are investing in the future. And this isn't just about Blackstone or Buffett. A ton of global capital is flowing into energy, clean tech, commodities, and infrastructure. The kind of stuff that's boring profitable, and mostly outside of America. Because while the US argues about interest rates and debt ceilings, other countries are quietly setting up for growth. So the real question is, if the most successful investors are setting up their bets overseas, why isn't the media talking about this? Now here's the part that really matters. Because this isn't just a billionaire story. This shift has real consequences for everyday people. Right now, most Americans have nearly all of their wealth tied up in US assets. Things like 401ks, local real estate, and savings that are losing value rapidly due to inflation. And yet, the smartest investors are clearly saying, don't keep all of your eggs in the American basket. Think about it, if the dollar weakens, inflation stays sticky. If the US growth slows down while other countries boom, who is gonna feel it first? Definitely not gonna be the billionaires. It's the everyday American, the person with one job and one income stream, and a single savings account. And that's the wake-up call there. We're entering a time where you can't afford to think like everyone else. If big capital is diversifying and going global, maybe it's time to ask, what does your portfolio look like? Not just financially, but your income, your skills, and of course your assets. Are you betting everything on a system that's already flashing warning signs? Look, this isn't, America's finished, but it does mean that the rules of investing clearly are changing. And if the people with the most to lose are shifting how they invest. Now, I'm not going all in or investing overseas, but I'm definitely watching what the big money is doing. But I'm also not going to follow the old playbook either. Instead of waiting for the big crash or rate cuts, I'm focused on assets that cash flow, income that does not rely on one job or one economy, investments that can weather inflation, volatility, and of course political chaos. Because this next decade, it's not about who has the most, it's about who is most prepared. Now I want to be clear, I am not saying that billionaires see some major collapse incoming and they are rushing to the exit in advance, but what I am saying is that the US consumer has never been in this situation before. Companies, small businesses have really never seen this type of pain. And we're watching the US slowly grind to a halt. The economy felt by the American middle class has never been harder. And so what I think we're going to start to see here is a situation where it gets a little bit too risky for these really, really big firms to have all their eggs in a basket where consumers, they can't sit down and eat at that table. They don't really have the appetite financially to continue to spend and spend and spend like they did before. And so because of this, they look at other countries, they look at Japan, look at Europe, and they see these markets offering a lot more upside, less downside risk, and they can diversify safely. Now, what I do think is very likely going to happen here is I think the next 5 years, we are going to see a unique pattern unfold where we're going to see this affordability migration, where we're going to start to see a lot of people leaving expensive cities.
Cost of living in New York City has skyrocketed.
We make decent salary, but it's still not enough to survive in New York City.
People leaving California. But what might shock you is the number of people going to different states. Last year, 500,000 people went somewhere else. The primary reason for people leaving? California's sky-high housing costs.
In 2020 and 2021, we saw a lot of people leaving Los Angeles, New York City, San Fran, Boston, and it went where? They went to Austin, Texas, they went to Florida and Miami, they went to Nashville, and they moved because it benefited them. They could move with their high income and now work remote. However, what I think is going to happen is I believe inflation is going to get worse. Home insurance is going to get more expensive.
Homeowners nationwide are facing a crisis, right? Skyrocketing insurance premiums or outright policy non-renewals.
Everything is going to get more and more expensive.
Most Americans are not making enough money to afford the basic costs of living. Minimal quality of life is out of reach for the bottom 60% of American households.
And if most people don't need to live in the city to work anymore, they're going to have no choice. They're either going to leave the country or they're going to move where they can afford to live. And I think we're going to see it, really seeing a lot of people leaving, and they're going to be going to the handful of affordable markets. I saw an article, The Hill magazine, saying that if you make less than $200,000 a year, there are 7 states left where you can afford to live. 7. So that's what I think is going to happen. A huge chase to affordability. It's going to benefit certain real estate markets, and a lot of these high-cost areas, these high-cost markets, could see some downward pressure with insurance. And I think we're just walking into a really big change in America. I think there's a lot of opportunity to capitalize on this change, but definitely worth paying attention to what Buffett's doing, what BlackRock, Blackstone, the big money is doing. They're repositioning for a big change here in America. Let's talk about it below. And for more information on what I'm doing in Ohio, you can click the link in the description if you have 500K minimum, and I'll catch you next video.